All right, guys, this is Vinit from Edge-Forex, and today is the first day of third quarter, 1st of July, 2025. And as everybody knows, the markets are going, especially Forex markets are going absolutely bananas. US dollars taking a beating, uh, tariff deadlines are looming, and geopolitical twists are keeping us on our toes. So let's dive deep into it. But today is not going to be a session around any technical analysis or any charts or anything. Is how do we keep our cool in this chaos, and how do you find your edge in this chaos, and especially how do I just want to share how I deal with this much anxiety in the market. And I think I there may be a thing or two you can take away from my experiences and my all the things that I have learned over the years and being in the market. So maybe it'll help you guys a little bit, especially to the newcomers and who have not seen this thing in their trading career, because what's happening right now is totally unprecedented. It has not happened. This kind of fall in the dollar, this kind of chaos in the forex markets, has not happened since. Are you guys ready? 1973. That is 52 fucking years ago. So I just want to make sure you guys understand the magnitude of this move that is underway right now. So what's going on in the forex world? It's like markets are riding a roller coaster and there are no brakes on the roller coaster. Well, US dollar index has dropped over 10% this year. So it's the worst 6 month stretch since the days of disco and bell bottoms. That was back in 1973. That's how significant this move is, as I said. Investors are jittery about Trump's push for Federal Reserve rate cuts and potential for trade disruption because 9th of July is the deadline for trade deals that have to be done across the globe for all the countries in the world. And nothing is going smoothly over there. So that is sending the dollar sliding against the heavyweights like the euro and the pound. And then if trade talks, especially with China, do not deliver, we could see some serious volatility in safe haven currencies like Japanese yen and Swiss franc, and they might steal the show. In the meanwhile, Fed Chair Jerome Powell is under pressure to slash rates. Trump wants to slash rates when the inflation is going lower and economy is getting better. How stupid one has to be to go that route. But then what has Trump done in the last 6 months? With anything but stupid, in my opinion. So if you're a MAGA fan, I am not a hater of Trump. I'm just a hater of what he's doing to the economy and the marketplace. So because of the volatility, I was going about the Jerome Powell. Now Trump wants him to cut the interest rates down. So if over in the Eurozone, inflation just hit 2% as expected. And now there is a meeting happening in Portugal, Central Portugal, where Lagarde from ECB is saying that they have hit their target inflation. So they may or may not cut any further, which is sending euro even higher. And let's not forget the Middle East. A recent ceasefire has calmed things down, easing demand for safe haven, but a new flare-up could send traders scrambling back to yen and Swiss franc. It's a lot to take in, but there is the thing. Chaotic markets are where the opportunities hide, as long as you know how to stay cool, and that's what I want to talk about today. So let's talk about how to navigate this madness without losing your shirt and, even more importantly, your sanity. Picture this, guys. The charts are spiking like a horror movie. Your phone's blowing up with news alerts and your trading account, is giving you side eye. It's tempting to jump in and trade every move, but that's like surfing into a tsunami. Instead, you guys, everybody, we need to stick to our trading plan, because your trading plan is your best friend. If you're eyeing, say, USD JPY, don't just chase a spike or a dip. Wait for a solid signal that you have tested in the past. And for us, it's a triple edge system. For example, we are not jumping it. I'll tell you guys what we are doing with our trading. But for example, our triple edge system gives us the edge over everybody else. Why? Because it's proven time and time again. All we need to do is spot an overextended move, which we can do right here. For example, we're looking at a chart, daily chart of USD CHF. I hope you guys learned something out of this, because this is worth its weight in gold. So for example, we have this overextended move that started, say, earlier this year. So let me draw this trend line and then let it bring it down. Okay, so it's going up, picking lower lows, lower highs, lower lows, and now it is again making new lows as we speak. Today, this morning opened and markets just went absolutely bananas. So now our triple-edge strategy keeps us keep our sanity. So now, because we are not chasing a trend, we know our rules are set. We know what to trade. We know how to trade. We know when to trade. So our sanity is in check, and we are not just chasing the market. So here, for example, our first is already two of the three thing. We have a triple edge, so we have three rules that we follow. 2 out of 3 are check right now. What are those 2? The first one is spot an overextended trend. Look at this, guys. The RSI is sitting at 24. Daily RSI on 24 is a big deal, guys. This is hugely oversold, looking for a mega pullback. And then there is this trend. Okay, guys. So now we have a daily, we have an overextended trend, and we have a divergence. So that's our second edge. So edge number 2 is we spot a divergence on an overly extended trend. So the trend is overly extended and RSI is diverging. So RSI is telling that, hey, my momentum is slowing down even though the price is going higher, but the momentum is slowing down. And because RSI is making higher lows and higher highs. So that means the RSI has turned. So on a daily chart, I'm not talking a smaller chart, smaller term chart, like a 4 hour or a 1 hour. We are looking at a daily chart. So now, 2 out of our 3 conditions have been satisfied. So the third condition is when this breaks out of this trend line. So this trend line is a huge resistance. Then it breaks it out, and then even better, once it breaks out and then comes back, tests it as a support and then goes back up, that's your entry. So till that happens, we are on the sidelines. We don't want to chase this thing low or high, because we know our trade, our edge, our system has not given us a signal, even though 2 out of 3 things are in place, and we're just waiting for the third one, which is a confirmation of the trend. So that said, my idea is not to teach you how to trade. My idea is to tell you how to keep your sanity, and as to how we keep our sanity. All right, guys. So now, with all this volatility, we have to be really smart, because one day, because even though right now it seems like dollar is only going to go one way, which is low, and low. No, that is going to change. And when that changes, it's going to be very dramatic. So now is the time to look at your position sizing. It is a game changer when the markets are like this. So if you have an account that's, they say, I'm just making this up, it's say $10,000, and your position sizing is say half a lot or a lot per trade, bring that down to 10th of a lot. Bring that down to 5th of a lot. So your risk is a lot lower. Now, even though the markets are going crazy, your risk is lower and you are ahead of the game. You are not losing your sleep. You are keeping your sanity while everybody else around you is panicking. So very important is your position sizing. It is the holy grail of keeping alive in the marketplace. Seriously, guys, if you can get your position sizing correct, and you know the amount of risk you're going to take, you're already more than halfway there. Even though you don't, even may or may not have a solid strategy, which you, of course you do need. So it's not just a solid strategy, it's the solid strategy combined with risk management that gives you the result that you need, which is pips and profit. So now you have a solid strategy. I'm assuming you have a solid strategy. If not, you have your triple S strategy that I'm show every now and then. That's your strategy because it's time tested. We have back tested it 20 freaking 5 years, and it's standing true even today. It gives you 80% positive trades. So you have a strategy, right? All you have to do now is it's all about risk management. Position sizing is number one risk management tool. I'm going to give you more risk management tools. Stick around. I'm going to get into those next. So now, speaking of safe bets, let's talk about safe haven currencies because they're having the moment right now with tariff talks and geopolitical risk simmering. The Japanese yen and Swiss francs are like cool kids at the forex party. Just don't pile in blindly. Watch for overbought signals or oversold signals when it comes to, say, USD, CHF. So, and the next, your best friend is Bollinger Bands if you are looking for entry points. If it breaks, you could see a sharp move. So use the tools like Bollinger Bands or 50-day moving average to time your entries. So timing, I would say, is, well, people say timing is everything. For me, timing along with position sizing, along with your strategy, all when everything comes together, that's everything. Now, here is where things get real. Extreme markets, like right now. Let me go back to the chart. Okay, so extreme markets, like right now, where you are looking at a daily RSI of, say, 23, 24, that's crazy. So that's, to me, that is extreme. These extreme markets, they don't just test your strategy, they test your mind. Markets are a mind game, guys, because markets are nothing but accumulation of millions and millions of traders in the real time making real time decision. And you are now set to not only be against one of the best minds in the market, also against the computers, against these high-speed computers, powerful computers that are making decisions that have no, these computers and these servers that don't have any emotions. They are strictly rules-based. So you know, and you have your emotions already playing against you. So these markets, again, they test your mind. FOMO is fear of missing out. Panic, that's number two. And worst of all, it's revenge trading. So it's all part of that testing your mind. These markets, they will test your mind like anything. So if you can get over FOMO, panic, and revenge trading, guys, you've made it. I've seen traders blow their accounts chasing trends or trying to catch a falling knife just because some headline got them hyped. So don't be that trader. You take a loss, take a small loss, get away. And I'm about to talk about my favorite strategy for the for risk management, and it's gonna come, and I think you guys are gonna love it because that's what I use very, very regularly, and it saved me so many times, and my favorite strategy for risk management is hedging. Hedging is because the markets are like crazy and hedging is having a lifeboat. If you are worried about, if you have a trade, right, that is open and for example, you have short EUR USD or you are expecting your euro to lose value or to get weaker against USD, but you are worried about these temporary phases that we are in right now, and you don't know what to do, ideally, you would have a small position open. But even in the case if you have a big position open a hedge. Okay, if you have a sell trade on EUR USD, open a buy trade while leaving a small edge on whatever direction you think the prices are going to move. So what that is going to do is temporarily going to reduce your exposure to extreme moves that markets may be making at that particular time. So smart hedging can make or break your hedging cannot break your account. It can reduce the amount of profit you'll make, but it's going to save your account. Your account is not going to break. Your trade may make 10, 20% less in profits, but you are not going to lose your sleep. And now there are times in some cases where, one second, let me bring that other screen back up. So right now in Sintra, Portugal, Lagarde, Powell, they're all having their speeches, and as they're speaking, markets are going up and down accordingly. So now going back to hedging, not all brokers and countries allow hedging. Now, how do you get around that? There is a very smart idea to get around that. For example, if you see, let's go back, look at a chart of, say, AUD USD. Okay, so now also let's look at a chart of NZD USD. Oops, NZD USD. Here we go. Here, these are very similar looking charts. So it's often that our Aussie dollar and New Zealand dollar, they're rather correlated and move kind of in the same direction against US dollar. So now if you have long position or a short, say if you have a short position on AUD USD, what you then want to do is to hedge. Ideally, you would want to have a long position on AUD USD, but if your broker doesn't allow hedging on that same pair, you can hedge long NZD USD instead. So, but your final the effect is the same. You're going to get the same kind of hedging. You are going to maybe making a little less money, but you would be hedged. Your losses would be limited on the downside. So these are very, very important things to learn as we kind of hone our skills, as we learn to read the markets, and and learn to navigate these kind of things. So that is where I insist that you guys send me some questions. It's engage and get involved in an everyday basis, because that's what I do. I come out every day now, and I'm going to do that for foreseeable future till we have some kind of dialogue going on our Road to Million Club and on our Telegram group and our Facebook and YouTube. I'm not going to give up till we have loads and loads of participation from our followers and listeners. And I am here to guide you guys, and I'm here to learn with you guys. So it's not like I am be all, end all, know all about the markets. No, I am not. Every day I learn something new, and I want to share that with you. And I want you guys to share with me what is it that you have learned in this case, especially when there is so much chaos in the market. Right now, I'll tell you guys what I'm doing. I have put hedges on all my positions on my long-term account. I've put hedges on all my positions. Right now, all I do is just follow the news, see where things are. I am not trading at all. Why? Because there's so much chaos. I don't want to be part of it. I want to have peace of mind. I want to have sanity around me, and I don't want to. I go out. I go for mountain biking. I go out, go for a swim. I spend time with my son, and I just tune out trading all together. So that is the only way to keep your sanity, and you will get out much better on the other side of this. I cannot stress enough, guys, your health, your mental health is a lot more important than your trading account. Keep that in mind. Okay, your family needs you. You need your family. There's no point taking extra stress than you actually need to. When in doubt, when you are in panic mode, when you have stress, just hedge your accounts, take a break, come back to fight another day, because markets are going to be here. Your health may not be. So health is everything first. Family is after that. And then comes trading and learning this trade. It is a trade. It is a skill, guys. It's not going to happen with a fluke, because I've seen enough people get destroyed in this discipline. I have destroyed enough of my own accounts in the past, where I let my emotions take over my decision-making skills. But over time, I have learned how to deal with my emotions. And the best way to do that is not to do anything. Step away. Hedge your account, hedge your trades, and step away. come back when market has a direction that you can actually predict. So that said, send me a DM or two. Let me know what you guys are thinking. Let me know what you guys want me to cover tomorrow, day after, next, whenever you guys want. And I would be more than happy to do so. If you guys have any questions, I am here. And if you don't have any questions, I will be back again tomorrow, same time. Do not miss it. And I look forward to talking to you. All right, guys. Thanks a lot. Have a nice day. Nice evening, rather. Bye.